It's starting. And officially welcome to the Market Watch Group Working Sessions Intermediate Advance. My name is Scott. We are not starting at 8 p.m. This is an 8, call it 8:55. We went a little long on the beginner side, which is fine. And this is going to play directly into it, but just to stay formal, let me remind you that this is for educational, illustrative purposes only. No recommendations, no guidance. We're not brokers. We're not investment advisors. Yada, yada, yada. Okay. To the platform. So we started off with directional assessments, right? We were looking at ending or scaling out of some trades. We were looking at the start of some trades. We are looking at the start of some trades that have stalled out. All of which remain valid as they stand now. What else? A couple of things. Number one, let's talk about today's trade alert. We're going to get it right. I will send an updated alert for tomorrow. Let me bring it up in front of us here. I was trying to get it out, and I had used a template. Yes. I see it. Son of a gun. July 27, August 2. So this is a July 27. Now, you'll notice I'm not going to keep 24. And you might be like, well, wait, Scott, is that 2027, 2024? Assume it's the date if there's no apostrophe. If there's an apostrophe, then it's the year. So if you see an apostrophe 24, that's the year 2024. But right here, I'm saying July 27. That is the expiration date, July 27th. The second one is going to be August 2. Now, let me show you this trade in here. SPY. Okay. I forgot to just kind of check in. Are you guys seeing me? Are you seeing my screen? Are you hearing me? Yes? Okay. July 27. Yeah, you're right. Sorry, I meant July 26th. It's right. It's right here. I looked at my date wrong. You're right. Now, technically, they don't expire until Saturday. Functionally, they expire when they stop trading Friday at 4 o'clock. And even then, index and ETF can go for an extra 15 minutes. So there's some funky rules. But remember that options don't actually expire until midnight the Saturday after. When could that be important? Well, if I have an option that's around the money, which means it's close to its strike price, and I let it go, it's an option that I sold. Somebody could exercise me on Saturday. I wouldn't know it until I got back to my account on Monday. Not something that you would expect to happen often, not something you have to pay a lot of attention to, especially if you close before expiration, which I definitely do more often than not. But keep that in mind. So yes, we are doing the July 22nd, the July 26th, August 2nd, 5:55 strikes. So how would I set that up? New. I would come in here to trading on SPY. And you'll notice I'm on a calendar spread right here. I'm going to come down to July 26th. That's all I care about is the first number for now, July 26th. I'm going to open that up. Now, in the alert, the strike price was correct. A 555 strike price. Now, with that being the case, when I come back in to actually build this trade, I'm going to come. So let me map this out. So I start here, July 26th. I don't care about this number yet. Only July 26th. Next thing I care about is 555. They're the same. That's all I worry about. I am going to be doing these with puts. Did I say that? I think I did. Man, I was off my game on this one, you guys. Puts. And just to make sure that's clear, I'm going to put calendar spread. Okay, that's a little better. Now we're getting to it's more concrete. But like I said, some of these alerts, there is an element of timing, right? We're timing if I put an alert out and 3 days later it's gone up 4%, you're like, is it still good? No. This is not about timing. This is about time. Not about timing, about time. Time passing. I can miss it a little bit. I don't have to be Johnny on the spot or Jane on the spot getting it right. That's something that's important for us to be aware of. Okay? Clint, how am I looking? Are you seeing any issues now as you look at the alert, or is this starting to be like, okay, yeah, now you're making more sense, Scott. That's a little better. New, so it's all new. Well, you got a good instinct for it. What are we doing now? I come over here. This is a debit strategy. Otherwise, I would denote credit. Put calendar. I'm going to put debit in here. I don't want to be any ambiguity. Put calendar. Debit spread. Perfect. So we know we're paying this amount, $1.08 per contract. That's $108 per contract. And you're thinking, Scott, it's only 75. Okay. Remember, we're only focused on the first date. I click 75 cents, and that brings up, anytime you're in this platform, if you click the ask price, it's going to buy it. So you can see I'm buying, and this is a debit. But I don't want July 26th, July 31st. I want July 26th, August 2nd. Bing. And now you'll notice the $1.09. And we said, you know what? We want it for $1.08. $1.08. Now, what am I expecting to happen? Well, remember, what we're expecting to happen here is that during this time, we think it's going to maybe go up a little more, but basically pull back, find a new support level, and then start going again. So that would mean that out here, let me get myself a little more time. No, that's fine. July 18. So what? Maybe like by July 21 or so, July 20, something like that. It's going to be where? Basically the same place it is now. That's our premise. That's what we're starting with. Are we like, oh, if that doesn't happen, I'm in a lot of trouble? No, I can adapt this trade. So don't get ahead of ourselves. Just start with what is our basic premise? That we think it's going to go sideways. It's overextended. It's likely to pull back, go sideways, turn back up. Much like it did here. Much like it did here. Right? look at these windows. What is it doing in these windows? And you'll notice it's from here. And what's happening right now? Well, we seem to be moving into the next one of those. So if I take this trade, now let's go look at our model. If I take this trade, let's analyze this. Now I actually have double. This is the new trade that I'm looking at right here. If over the next 9 days, 1, 2, 3, 4, 5, 6, 7, 8, 9, maybe even a couple more. We said maybe the 22nd. If in that time the stock market pulls back and then comes up a little bit, now if it's pulling back and coming up a little, what else is likely to happen? We're probably going to see a little bit of vol come in, maybe up to 14. So we see this come in about 1%, maybe 1.2. And now all of a sudden, this trade, anywhere from 552 to 600 is making about $400 to $600. $400 to $600. How much did this trade cost? For 10 contracts, 1,080. So if I'm making $400 to $600 on 1,080, that's a 40 to 60% return on nothing. On nothing. I just sit here and wait. Nothing's happening. Time is decaying. That's it. Anywhere in this range from 552 to 600, I'm getting anywhere from $400 to $600. Okay? This is time decay. So anywhere from 552 to 560. So that's here to here. So if it's in this range, right? If it goes up and pulls back and turns, that's it. And then you're like, well, what if it's not, Scott? What if it doesn't? Well, then I adapt and I adjust. Let's say it goes higher and it goes up here to like 563 or so. Is that dangerous? Yes, it is. It's okay. It's dangerous. 563, I don't get this vol. That's for sure. It goes up here to 563. Well, first of all, I'm only losing about $130. It's not that bad. 564. I'm only losing $200, 225. Okay. So yeah, it's not great, but what would I do at this point? Well, I could put another trade on, right? Now I could come in and I could say, you know what? Let's analyze another trade, but let's do this one up here at 565. That's a little too far. Let's go 563. They don't have it. 562. Perfect. So I put on another trade. If it gets out here to 563 where this line is, right? And you're like, hey, I'm losing money. 560, let's say it goes right here. I put this trade on. Boom. And now all of a sudden, all it has to do is pull back. Not like 8 points, 9 points. It pulls back $1, $2, $3 to $4, and I'm in my sweet spot. And you'll notice that now if we get a little bit of vol and we get that sweet spot, now we're up here at $700. And with a little teeny bit of implied volatility, we're between 800, 900, and that's where this trade can really, really do well. Is this like my primary strategy? No, this is a strategy that can do very well in a low volatility bullish market. What kind of market are we in? Low volatility bullish market. Are we getting a lot of trade signals right now? Are we getting a window that's opening that's like, hey, Scott, look at this beautiful window? No, in fact, most things are getting closed right now, right? Most things are winding down right now. So yes, that's it. I would adapt the trade. Now, at that point, if all of a sudden the market like just rallied again and it just got up to 569, I'm going to take my loss. I'll lose $300. Now remember, I was going to make anywhere from 4 to 6, maybe even up to 8 or 900. I would take a $300 loss only if it goes up to 569. Where's 569? I don't even have it on my chart. I do. It's barely there. This thing would have to just march. So what's the fear? A crash up. A crash up. And if it happens, I have to take my loss. Statistically, I expect to be right on counter spreads around 70% of the time. I expect my wins to be bigger than my losses. So it's a very profitable expectancy as a system. If it's new, what do? Paper trade it. Get 10 of these on paper trading before you do anything. Or if you're like, you know what, Scott, I live dangerously. I live by the seat of my pants. I'm a 6-gun shooter. Bang, bang. Okay. Cowboy. Take it with one contract. Right? It's $100. One contract. $108. You're not going to scale. You might add a second contract. Boom. Now you're in for $200. It's not going to be fantastic gains if you're right. Make, $40 to $60. If you get a second one on, maybe you get up to $80, $90. Okay. So what? Right? Give yourself a break. Paper trade it. If you're not willing to paper trade it, one contract. Don't dive into this without maybe getting that sense. And that goes for all of it. So Don, I know you had some issues with Webull. I hope you had a conversation with them. I have never in my life heard of a restriction on a paper account. I mean, they will restrict it. So, for example, I have a paper account here at Thinkorswim. Anyone who has an account has a paper account. If you can actually pull up both a taxable paper account and an IRA paper account. The IRA paper account will have some restrictions that the live account doesn't. But you should have full capacity to just play, practice, learn, make mistakes. I tell people I'm not paper trading to let me see if I can be perfect. Just like if I did a flight simulator, I'm going to be like, can I do a loop-de-loop and recover? If I push this stick all the way down, can I come back from that? Right? If I go into a dive, am I going to die or can I pull out of it? Let's test some things when it's safe so I really understand the limits of what I'm dealing with. Can't put a trail stop on paper trades. I'm okay with that. Fidelity actually doesn't let you put a trail stop on paper trades. I typically put a manual trail. I put it on and then the next day I cancel and replace it and I move it here. And then I cancel and replace it and I move it here. Because I believe that as the trade moves forward, I want it to be tighter as it moves higher, not the same, right? Early in the trade, I want to give it some distance. The higher it goes, the tighter it gets, like a noose. And trail stops don't work that way. But us manually placing the trade, you do want to look at the possibility of conditional or contingent orders. Those are important. But even then, look, is it a hassle a little bit if we have to build a workaround? Obviously, we'd rather just do it the easiest possible way. But there's always a workaround. Always a workaround. Here's what I tell people. If you go to Charles Schwab, now this is not true. I mean, this is true to the best of my knowledge. When it was at Ameritrade, if you went to Ameritrade and you opened an account, and they said, how are you going to fund the account? And you said, I'm going to send you a check. The check's in the mail. They'd be like, okay, great. Here's your account number. Now you can get online. You can go download Thinkorswim. You can log into the Thinkorswim paper account using that new account number, and you can paper trade to your heart's content. They won't bug you for at least 60 days. That was how Ameritrade did it. I don't know for sure if that's how Schwab does it, but they don't even require you to fund the account. And in fact, Ameritrade would call you and they'd be like, yeah, what are you doing? I'd tell people, yeah, be honest with them. Be like, you know what? I'm working with a group. There's a guy, he said, this is a great platform. You should check it out. Kick the tires, pop the hood. And that's what I'm doing. So you tell them, I want to paper trade on this a little bit just to see if it has everything I need. Do you think they're going to be like, I'm sorry, no. The paper trading is for customers only. They're not going to. They want your account. So that'll give you a platform. Now, let's say that you, I believe they have like a $2,500 minimum or $5,000 minimum or whatever it is. Same thing. Ameritrade had a minimum, right? $2,500. If you open an account, said the check's in the mail, and then you're like, you know what? I'm going to send you a check. Here's $1,000. They never one time, to my knowledge, returned the check and said, oh, you know what? You didn't meet the minimum. Here's your $1,000 back. They deposit it, and they're like, all right, yeah, you want to trade? Go trade. If you start with $2,500 and you lose and you lost on your first trade, and now you have $2,000, are they going to stop you from trying to recover and trying to? No. So, yeah, that's what you want to bring to the group. There are frustrating things that happen, and it's very easy to be like, oh my God, the market's against me. It's not. I mean, it is. It is in the fact that it's a lawnmower and you're a blade of grass. So by that definition, yes. Right? Yes. But it's not personal. It's not out to get us. It's just an enormous machine of rules and regulations and laws and brokers and platforms and this and that. And anyway, I think sometimes we get where it can be frustrating. You're like, oh, that's a sign. There are no signs other than if you keep trading, you'll figure it out. I promise you. Well, I mean, if you stay with us, if you stay here, because this is a process and we will keep working until the process works. I'll show you all the things that we do to make adjustments to the process, to evaluate the process, to assess ourselves, the rules, to improve. We just keep getting better and better. And that's it, over and over again. Experience all the time, getting records, getting data from our record keeping, learning new trades, learning new systems, building new systems. It's a lot of fun, I think. I don't know. Where are we at? What questions, comments, or concerns? Number one, do you feel like you have a better sense of a calendar spread? I'll tell you this. I had studied options pretty intently, and I had come across calendars, and I said, these are not for me. I'm not interested in this strategy. And then the company I worked with merged with Thinkorswim, so I actually worked for what was at the time, the symbol was TOS, and it was called the Thinkorswim Group, and it was a publicly traded company until Ameritrade came in and bought the whole thing. I had left by that point, but we put a lot of time and energy into building the platform the best it could be, providing the best charts, the best orders, the best analytics. That's what you have in front of you here is that platform. So the tools you work with, it's funny, my daughter said, you wanted to get into snowboarding. And I said, great. You need to get good gear, a good snowboard, good boots, good pants, good coat. Because if you go up, you could be amazing. You'd love it. But if your boots don't fit, if your pants get wet, you get cold, your toes are cold, you're not dressed right, your bindings are too loose and you can't turn. I don't care what it is you're doing. Gear matters, tools matter, right? You're going to build a house. You want me to give you a hammer and a screwdriver and a saw? No, I want to make sure there's power at that build site, and I want to plug in all my power tools. I'm a power tool kind of person. The platform you pick, the charts, the platform, those are your tools. Are you equipping yourself with power tools? You're getting yourself a screwdriver and a hammer. Can you do it? Yes. Can you learn while doing it? Yes. Are you going to realize very quickly, God, I could do this so much better and faster and easier? Yes. Do I ask myself a lot of rhetorical questions and then answer yes? Yes! Hey, we still have some minutes. I've tried to cover a few things. I've tried to look at the trades that we've been in so you see what that's like. I'm going to go through the watch list, but if you have a trade you're thinking about, let's do it, man. Let's do it. Let's talk about it. Apple. It's getting close to the end with Apple. Our reward to risk ratio. Here's a good thought process. Okay. So let's come in here and let's put a stop loss at the Heiken Ashi for tomorrow. Low is 223.81. I'm going to put my stop at 223.68, which is below that. That's $5 below the current price. $5 below. What would I like to get in return for my $5? I'd like to get 10 to 1. I'd like to get 10, which is 2 to 1. That puts me up here at 238. Do I think I'm going to get up here to 238? No, nothing has done that. That's the biggest move we would have seen this whole year. If you're building trades with an expectation that you're going to get the biggest move of the whole year, you're going to find yourself disappointed over and over again. So I would say no, I don't have that expectation. So it's getting harder for me to put a stop here and feel comfortable, right? I don't want to risk 10 if I'm only going to make 3 more. Okay, what can I do? Well, I can switch this down to a 4-hour chart. Bam. Okay, same candles, but now if I use this candle for going forward, now it's 226.98. So if I put my stop here at 226.40, now I'm only risking $2.20. Can this trade get 4 or 5 more? 228.68 up here to maybe up in this area? Yeah. I've got Wednesday, Thursday, Friday. I'm not going to hope when it gets to the weekend, but can I get one more little piece out of this? Yes. Do I have an ability to tighten my stop, to manage this? I'm trying everything I can to give this the ability to keep going higher, but increasingly I'm less willing to take risk when doing so. Does that make sense? Does it make sense when I shifted from a daily candle, and there's a lot more width, to saying, you know what? If I really like the profit that I have, and I'm getting closer to the end of this trade, my next working session, we're going to talk about the stages of a trade. No one let me forget. Stages of a trade. There's a video about it. You can watch it, but I want to talk about it. So I go down here and I say, oh, look, I can tighten this up quite a bit. If it keeps going, I'll keep moving my stop. If it rolls over, I'm out. And I'm now going to lock in the vast majority of this trade that I have earned. Still with an eye to do what? I always want to let my winners run. It's a bull market. I want my winners to run in this bull market. That's my objective. AMD. I like it now, but I'm waiting for a pullback. Waiting for a pullback. Waiting for a pullback. I don't know. Financials kind of had a little bit of a giddy up and go, but they're close to earnings, so that's tough. Waiting for a pullback. Financials a little giddy up and go. Yeah, nothing you can do. I closed mine last week, and then they got a little jump. There's earnings. I just don't think there's much I can do but watch and wait with that. Citigroup overextended, earnings in a few days. Caterpillar, I don't know. If Caterpillar gave me a higher low, I might be like, let's see if Caterpillar can make a run. Right? I don't know. Why not? CL still in. CMG, no. Remember, we declared this a consolidation. Once we've declared a consolidation, there's no way to trade this until it, first of all, breaks the line of consolidation, makes a higher high, and then makes a higher low. So these are, once I'm in a consolidation, until I see that exact pattern happen, I'm not going to do anything but spectate. Okay, let's go look at oil, ConocoPhillips. I am definitely. Now we just drew a picture. Here's the consolidation. What happened? Boom, there's point number 1. There's my old high. Guess what? We got higher than that. Boom, there's point number 2. What's happening now? We're pulling back. There's my old low. If it finds a low and starts to turn up from here, and this turns up from here, what do I have? A higher low. Point number 3. What's the problem? It's oil. But remember last time oil got we're like, ooh, oil looks a little bullish. Would we have liked to have put something on? Yes. I didn't. I thought about it. I'm definitely going to do it this time. If this gets a little bit inflationary, I'll be ready for it. Let me know your thoughts on that analysis. So, yeah, that's off cycle, though, oil. That's not on cycle with the SPY. That's off cycle. Costco. Okay, Costco. Man, I thought it was going to be the number 1 stock of the day, and then it gave it back, but still looks okay. I'm going to give it one more day and see. I was already patient. So remember, we talked about patience in the hiccup. The alert came here, and then it hiccuped, but stayed with it. Patience paying off. Yes? Yes. Nothing there, nothing there. Bitcoin looking pretty tepid. GE still flat. Gold, a little bullish. Google, overextended. Pair down, taking profits, waiting for the pullback. IWM, nothing yet. Still very much in a consolidation, in a range. Like a triangle. KBH, nothing there for me. Coca-Cola, maybe. I'd still say maybe to Coca-Cola, actually. Meta, overextended, looking for a flag, a pullback. MFC, bullish, looking for a pullback. What are you not hearing? You're not hearing a lot of signals. What's the only thing we said so far that we think looks like a setup? Oil. Oil. So what does that tell me? The window's not here yet. Don't be like forcing trades, etc. Morgan looks bullish. Microsoft looks bullish but pulling back. I want to trade that again. Still holding to see if this can break. Looking for a pullback here. Not sure what to expect here. Booked the rest of my profit here. Looking for that to pull back and get another trade now. Just got a higher high. What do I think's coming next? A higher low. If I get the higher low, what comes after that? Another higher high. Patterns. QQQ. Overextended. There's nothing there for me right now. SPY. Overextended. Needs a pullback. TSM. Pulling back after a new high. UUP. Yeah, I don't love this. We got back below 29, but we're kind of right back at that level. I'd like to see this thing break back here. This is very good. If it keeps going higher, that's very bad. We want that UUP below 29, or any variation of a dollar analysis would be similar. The VIX is quite low still. Quite low. If you put a hedge on and you held it for a few days, you probably haven't lost anything. And here is Walmart. Overextended. Okay. Yeah. Be patient. Don't force trades. Is there a chance we put a trade on? We did. We put a calendar spread on. A calendar spread is off cycle. I put those on when the market's at resistance for the pullback. Do I do a lot of them or just put a couple on here or there? A couple on here or there. It's a complementary trade. The bulk of my trade should be bullish trading after the next pullback into the next bounce. But we don't have that right now. We have to trade what we do have. Okay, I'm thinking about an oil trade. I'm managing a CL trade. I'm managing a calendar trade. And I'm ready to adapt and adjust as necessary. So if you're out there like, I'm having a hard time finding something to trade, Scott, that'd be like good. Because if you were coming in here like, yeah, I'm finding all kinds of stuff, I'd be like, what? What are you possibly finding that you like so much? Please. Now, if your time frame is different, okay, great. Other than that, that's what we're looking at. Okay, what's next? So we'll wrap this up. We'll be careful the rest of this week. I'm definitely open to a trade on COP. But we'll see if that comes to fruition. Tomorrow morning, weekly market open. Or no, I'm sorry. Tomorrow morning, midweek check-in. 9:15 Eastern until 10 Eastern. At 3 p.m. Eastern, that'll be that one will be on the stage. At 3 to 4 Eastern, Glenn's going to be in the Meetups channel, ready to have a conversation about market close, what you're doing, how you're seeing it, etc., etc. Thursday, Glenn will do the beginner session from 8 to 8:45. I'll come in for his Q&A, and then I'll take the beginner or the intermediate advanced from about 8:50 to 9:30 p.m. And then on Friday, Glenn will be in the meetups for the first hour of the day, and we will meet together in the last hour of the day. So quite a bit left this week. Hopefully you're able to attend. Keep getting comfortable. Please, you guys, keep asking questions. Come into the chats. Put a chat up. You'll see Glenn saying hello. You'll see Gary saying hello. I'll say hello. We'll answer. We've got some good momentum going right now, so let's keep pushing. It's great to see everybody. I welcome your feedback. Go into the suggestion box. Go into Beginner's Corner. Either of those give you an outlet to voice whatever it is you feel like voicing. Other than that, I appreciate you. I appreciate you coming out and hanging out with me today, chatting through this. I feel like we're in a good place. I hope you do. If you're uncertain and you want to validate, bring it up. Flag it. I have to imagine that Clint was not that comfortable saying, hey, what did you mean with the May? But he did it, and it was right. So do it. Just say something. You're not going to hurt anyone's feelings or offend anybody, or no one judges you here. The only thing we judge you here for is being awesome, that you made the decision to trade. That's it. That's the only judgment. So anyways, I got to run. It's good to see you guys. I'll see you tomorrow in the morning. As always, happy trading.